Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
The Dow Jones has been on a tear since April, and now it's showing no signs of slowing down. In fact, since August, the index has consistently set new highs, thanks to the gradual alignment of monetary policy, real economic conditions, and corporate earnings quality. Voro here, let's dive into what's driving this uptrend. The Fed's recent decision to cut interest rates by 25 basis points was a game changer. Not only did it bring borrowing costs to a peak, making financial conditions gradually loosen up, but it also made the markets advance more sustainable rather than explosive. Now, you might wonder why this matters. Well, for one, the Dow is heavily weighted towards cyclical and value stocks, which tend to benefit when real interest rates decline while growth remains positive. And with the Fed signaling that rate cuts will continue, those conditions are looking pretty favorable. But it's not all sunshine and rainbows. Economic data suggests the economy has weakened, but it's still holding its own without tipping into recession. Manufacturing and services PMIs have softened, reflecting slower demand, while housing has shown resilience, with new home sales surpassing expectations. So what's next for the Dow? The upcoming releases of GDP, weekly jobless claims, and especially the core PCE price index will shape expectations for the Fed's next rate cut trajectory in Q4. And with growth expected to stay moderately positive while inflation continues its downward trend, real yields are likely to stabilize or decline, supporting equities. Now, let's talk profit margins. With capital costs declining and expense management tightening up, particularly in industrials, consumer staples, and interest rate-sensitive financial services, profit margins could improve. And that's good news for the Dow, especially when combined with share buyback activity accelerating following earnings season. But don't get too excited just yet. There are risks on the horizon. If inflation proves persistent or the labor market heats up, real yields and the USD could surge, putting pressure on cyclical equities in the short term. And then there's geopolitical risk, from Middle East tensions to NATO-Russia conflicts, which could prompt markets to shift back into a defensive stance. So where do we stand? The medium-term outlook for the Dow Jones is still looking positive, with financial conditions easing and valuations more palatable relative to high-growth peers. But the market's at a pivotal stage, and upcoming data will be crucial in shaping the Fed's next moves. Voro here, that's all for now. Stay ahead of the curve with Voro, your source for in-depth analysis on the markets.